Feel the waves cut through me, hypnotized by the sounds I'm breathing in. Hold tight, chemicals collide. Hold tight, hold tight, hold tight. Dripping lights paint the skies, all because of you. Dripping lights paint the skies, only you can make me move. You can make me move. Can make me move. You can make me move. Can make me. So alive, make it last forever. Stop in time, yeah, I'm surrendering. Hold tight, chemicals collide. Hold tight, hold tight, hold tight. Dripping lights paint the skies, all because of you. Dripping lights paint the skies, only you can make me move. You can make me move. Can make me move. Can make me move. You can make me move. Can make me.
Like you, be strong to hold the powers of the sun. To dream, believe in strength. Now I'm the only one, only one. I was an ordinary boy until I broke the rules. My life destroyed, a life destroyed. Until I woke awake, scream my mind, I shout, the ground shakes. How much can I take? My mind will break. Will it break? Can I take? Can I be your superhero? Superhero. Can I be your superhero? Superhero. 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 Fly up away. It's the first time of today. Today. To dream, a superhero. Can I be your superhero? Superhero. 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 Can I be your superhero? Over the edge, feel like I'm floating through the air. The pain I felt is paid for, all is said and done. Oh, I am restricted, fixed upon the web. I need to kick the habit that my mind is breathing in. Break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless.
The voice. Hi everyone, welcome to a new session with me, Mo. Today we will go through the four-step system and to figure out the ultimate blueprint for every traders to become professional traders from beginner to professional trader. Step by steps, I have been trading for over half a decades, and I'm gonna show you everything I'm gone through to become profitable traders. So that's being said, additionally we're gonna have a guest who is gonna give his point of view on the markets and what's going on. And bonus at the end is gonna be a bonus at the end. Stick to the end, and you will get your bonus. So first of all, who am I? My name is Mo. I'm helping traders build clear, confident setups without signals, so they can be independent, build their own structures and systems, trades, and generate their own high quality trade ideas. So they are not following, they are being independent thinkers. So I'm building thinkers in trading. So I have helped over 100 plus traders regain control and consistency. And over here, we can see exactly what's we gonna be going through today. So real-time insights every Wednesday I'm going live. That's being said, you can write your question in the chat. I will get back to you. And if you like this, please don't forget to follow. And let's dive deeper. So first of all, last time we have discussed about S&P 500. Let's figure out which direction currently is going. So last week, we have posted about this scenario where I said the resistance level over here. The resistance level is worked just perfectly. Look at this. I just extended this resistance level. I have drawn it 2 weeks ago. 2 months ago, sorry, apologize. 2 months ago, we had two scenarios. Either it's gonna go to the downsides from here, or it's gonna be an upside, right? Clearly over here, we choose the downside. What's gonna happen over here is the great question: is it gonna be continuation or breakout? More deeper, our guest gonna tell us soon enough. So what's I wanna tell you is over here our breakout structure for the downsides worked perfectly. And we one thing is which is concerning me about this structure is we didn't fill out the fair value gap. What does a fair value gap is mean? This could be a single print, it could be unbalances. Many people have different names. Is this the difference between the last close candles and the open candles? So the distance between them, if they are not touching, is it called fair value gap? Is it still liquidity to be grabbed? So let's take to the next thing. Yeah, one of those stuff is very important. Is talked about volume profiles. Volume profiles is very important indicators tools which I use on a daily basis. So volume profile fixed range is very simple and very powerful. It gives us three key levels. It's called the value area high and the value area low. These are the downsides and the point of control. Those three things is giving us where the majority of trades happen at the point of control. 70% in of the trades in this range happen at the point of control and value area low. Is as you can think about this similar to support resistance levels where you take you watch those support resistance level if it's breaking outside it or inside it, but sometimes when it's coming to value area high lows, we want to see confirmation. Or if it touches again, is it going for the upside or for the downside? And of course, you always need to use it with confluence with other indicator tools, system, volume to figure out exactly what's going on. You want to use market structures, you want to use fundamentals, news, and combine all this with great risk management. You will have a great trades, great entries, and great exits. So I'm using this on daily basis. You can check my trading view for more detailed analysis about this subject. And second thing I have posted today about support resistance levels. So it took me 3 years. I'm not joking. It took me 3 years to understand how to draw support resistance level correctly. So when it's coming to support resistance level, is many people looks only for levels, whereas majority of trades happens. For example, many people's gonna be looking for this area over here as a support resistance. But me personally, I like the monthly, weekly, and the daily support resistance levels for swing trading on lower time frame, 15 minutes, 5 minutes, or for scalping. What scalping mean is high frequency trading. Basically, scalping mean I enter this trade couple minutes, couple seconds later I exit the trade. A day trading means I enter a trade today at the market open. I close my trade before the market closes. This is definition of day trading. So I personally, I am also in different time frames, different scenarios also. Why is this important to understand later on? I'm gonna go shortly into the steps which I'm using to become profitable traders, right? The blueprint, the ultimate blueprint. That's being said, let's dive into the blueprint itself. So we are getting alerts. So let's check out which alerts is going off. Is this the ES, the S&P 500 futures on my chart? And couple minutes ago, I think it was the FOMC minutes. Yeah, FOMC minutes, nothing changed. Still the same rates and same information. So the markets is still cautious and the volatility is still in the market. So I like to use also the VIX volatility index over here, which is calculating the 30 days over the next 30 days volatility based on the option markets. So we hiked up to 25 as potential tariffs and information. And right now for the downsides, it could be going higher. I was expecting it to go higher, but we didn't go higher. And I'm just a little bit confused. What's the market direction right now is the most difficult markets ever. I never saw such a market which is brutally being liquidating. What does liquidating mean? Is grabbing you stop losses. Is hunting another level. Is the jungle lioness and lions waiting for you, wolves waiting for you to just grab your liquidity in the market. And more brutally, it's being in the crypto markets and on the stock markets. We see also a couple of brutal action as is like behaving like a pump and dump scenario similar to low capital coins. So I'm very cautious about the markets. I'm actively managing my risk, and we will dig deeper into those all information. So first of all, so we want to dig into the 4 steps of scenarios. So let we check if everything is working. On the live stream, sometimes complaints happens being my risk, and we will dig deeper into those. Perfect, the live stream is working very well. And we're gonna go over here. So last time we have drawn this system, right? My trading journey. Right now, we're gonna do the blueprint. So we're gonna copy this over here and do the trading blueprint, how to become profitable traders and what do you need to understand when it's coming to trading, right? So many people do this mistakes of going just to Google and Googling trading, and they will always showcase the best results. So Google shows the search engine optimized results, which is giving you people who have used the word trading many times in the blog articles, videos, and more, or have highest views, highest likes. So, but this will get many people confused because views and likes or the first result doesn't mean they are the right ones. So over here, the ultimate trading, sorry, ultimate trading blueprint, and let's make it blue because it's blueprint. And is it the blue pill from Matrix or the red pill? So let me close this so we can dig deeper into it without any changes. First of all, what we're gonna do, we're gonna take a box over here, and in this box, this is gonna be you. Start trading. Okay, we're gonna start with trading over here. So we are starting trading over here. You're gonna be Wojciech. And you will be starting trading over here. After starting trading, the first thing you will be doing is going to Google, right? If you go to Google, this is wrong. You don't Google trading. Basically, say it when you Google trading, you're gonna have different results. You're gonna have best possible result which is optimized for you, right? This doesn't mean it's gonna be working. Second of all, okay, what you're gonna be doing? Watching just random YouTube videos. What's going on? Let's duplicate. Watching YouTube. Okay. You will be watching random YouTube videos, which doesn't make any sense and you don't know where to start. Third of all, the next step, you will go to a broker, right? After watching all those videos, you will go to broker. Okay, what's going on? Wait, it's not writing. So over here, you will be going to a broker and create an account. After you creating the accounts, you will be going and start trading. Okay. All the stuff which I'm telling you, which is what you will be doing wrong in trading when you start. And trading, you're gonna be trading almost directly. After trading your accounts, entering trades, you don't know where you enter, you just believe it's gonna go higher or lower. You put your trades, and an even more insane thing is happening when it's people comes to trading for the first time. And they go into the option markets, which is more difficult than trading itself, because option markets, you need to understand the stock itself, the fundamental, the technicals, all the other stuff, risk management, psychology also, to be able to be profitable consistently in option. Your goal is as a trader to be profitable and consistently profitable. So it doesn't mean you want to be right. You just want to be profitable and being profitable in the longer term. Beat the S&P 500 in the longer term. And which is very interesting also, there is two types of people: the traders, the investors. The investors doesn't believe in beating the S&P 500, which is, in my opinion, is very crazy, because you can beat the S&P 500 with the right systems, the right structure. Millennium Hedge Fund has done it for decades, so why can't you? Are they much better? They are trading with billions and billions of dollars. You are trading with much lower sizes accounts, and your edge is being a retail trader. Being a retail trader, your edge is you are trading in those small size accounts, and you can leverage this into your edge and advantage. Why? That's because the larger your account is, the more likely people is gonna try to make wins out of your trades through your volume, through the fees, through the arbitrage, through the spreads, and all this stuff is just gonna be costing you money, right? The bigger account you have. So you wanna be right consistently when you have much larger accounts, because each time you make a trades with $1 billion accounts, you are paying fees couple of millions, right? And this sum of trades which is happening in the world is insane, and the brokers are making ton of money through those volume coming in, right? So after trading on the broker platform, you will be watching the broker education. So majority of the brokers themselves, okay, they have education system, education, okay, provided by brokers. Why they provide you with education? They want it from you, okay. Okay, again, I do a little bit lighter color. They want you to trade often, okay, trade often, trade with volume, trade with volume, and also trade wrongly. So they don't want from you to win. Just as basic. The secret of brokers, they don't want you to win. If you wins, you make money. They are not making money. The business model is based on you trading often, trading with size account, and trading wrong. You just insert your 20K account into the brokers, you start trading, you slightly, even if you are at break even, if you position started at $100, one stock started at $100 and went up to 150, and you exited at 100 again, okay, you are at break even basically on a trade level. But this is wrong, because there is fees and there is spread, which is you're also not calculating into your cost. So the total cost of the trade is the fees plus the spread and minus the trade cost. What does it mean? Let me write over here to make it simplified. Trades, profitable trades, okay, means equal to entry level minus exit, and your exit must be higher if you are in long position, okay, and minus the fees minus spread and taxes. This is what a profitable trading means. This is the formula for profitability in trading. So let's make it bigger and put it over here. So we know profitable trading means I'm gonna enter another level and I'm gonna be exiting at higher level with more money, but also there is fee spreads and I'm gonna pay taxes on those returns at the end of the day. Depends on which country you are, and it varies from country to country. So we know educators have conflict of interest. Okay, they don't want you to win. Conflict of interest. So we know they don't want from you to win. It's that simple. So when you watch the education of the brokers, think twice what they are teaching you, right? They have conflict of interest, so they're putting ton of monies in it. It could be one or the other thing is correct, but it doesn't mean it's gonna be that way. So after that, you you start losing money. You start losing money, and after you're losing money, you come over here watching more YouTube, more YouTube. Okay. After you watch more YouTube, you learn more about trading in such terms fundamental, technicals, psychology. Okay, by the time you reach this level, your psychology already fucked. So your system is already fucked, and your psychology is used to the chaos which is of trading, the unpredictability of trading. So you learn this, but despite that, you are not profitable because there is not a system which is cotton only for you. Because it could be you working a job, it could be you are studying, it could be other reason which is going into your life and you're starting scalping the markets on such high frequency. You disadvantage in the market, the lower time frame you go, the harder it becomes. How is that? When you go to lower time frame is very simple. There is bots, there is hedge funds, there is high frequency, they have ton of tools, they have ton of resources to make the trades faster and enter before you. And it's that simple. It's arbitrage system. And the more you're trying to beat those system at the start, it's difficult. And of course, there is profitable day traders, profitable scalpers. But at the beginning as a traders, you get addicted to those shiny objects of 10K, Bahamas, beach, Thailand, Bali, going over there and starting trading, opening your laptop 2 minutes out of the market, you made 10K. All of this is a bullshit. By the time you reach this, you have gone through ton of setbacks in terms of psychology, managing your trades, and if you stick till there, is you have already been in the market for over half a decade. It took me enough time to understand the market. The concept almost always the same when it's coming is there is different types of trading. It's called investing. First of all, everything above the 6 months is called investing. Let's make definitions, okay, of trading. Okay. Let's make it green. Definition of trading. So there is definition of trading. Let's make it this one darker green and over here. So we have first of all investing. Investing. What is investing? Everything above 6 months, holding everything above 6 months, holding a trade is investing. So that's being said, so we know right now investing everything is above 6 months, right? And what does swing trading mean? Okay, swing trading. Swing trading, let me drink a sip of water. Swing trading is very simple. Everything between 2 days to 3 months is swing trading. Okay, so we know swing trading is everything between 2 days to 3 months. I prefer a new version. I call it between 1 week and 3 months. There is day trading. Day trading it is from market open till market close. And the final version, which majority of people jump on when starting trading, either is our options or so-called scalping. Scalping seconds till minutes. So scalping is between seconds and minutes, investing between 6 months and everything above, and so more. So the problem is with, let's watch an example with the problem which is coming to investing. Why investing is not ideal for everyone when you want to make generational wealth. This is already done analysis. So let's do Microsoft. Let's put the 4 hour. So over here, okay. For example, you have entered over here. Your entry will over here. Entry as an investor. Okay. And the market went up and the market went down. Okay. In a range of how much? In a range of 3 months. Okay. The area from here to here is 3 months. So we know it is 3 months, okay? By the time the price reached over here, you have 0 return on investment. 0, or let's call it ROI. Okay, you have 0% ROI over here. But as a trader, okay, you would have entered over here, okay, you would have known to exit somewhere over here based on your technical analysis and the fundamentals you have done as a trader. Okay, you have been taking a 16% upside. So let's do an upside up to here. This is 20%. So as a trader, okay, you would have a 20% movement, right? You would put your stop loss somewhere there, below this wick, which is going to be quite tight. So you are risking $1 to get $10. Is it that fair? You're risking $1 to get $10, okay, to upstairs there, up to here. So we know you are risking $1 to get $10 as a trader, okay? And it is gonna be 10% movement. Sorry, it's gonna be 20%. Where is the measurement? From here up to here, okay, is 20%. So as a trader, you have made 20% to the upside, okay? And based on the market structure, you would have entered somewhere over here, okay? And this would have been another 12%. So from here, based on the market structure, 12%, okay? As a trader, you would have made in total 32%, okay? Gonna make it like this. Trader long, okay? And trader short. So you short the market and long the market. You made in total 32%. So in comparison, okay, over here, we have 32% return on investment as a trader. It doesn't matter. You can do it with ETFs. You can do it with stocks, you can do it with crypto. It doesn't matter which market it is, but it's very simply said, as a trader, you had 32% in comparison as an investor, you had 0% return on investment. Of course, some people are going to say, okay, trading is more difficult. Of course, it's going to be difficult if you learn from the wrong people, you learn the wrong stuff. It's going to be difficult because you don't understand what you are doing. And it takes time till you understand all those market patterns, all this information. There is, of course, a high level of entry level in trading. So basically said, everyone comes in the trading with the dream becoming profitable, becoming successful, and which is very difficult at first because there is ton of conflict of interest. Many people don't understand which strategy matching their own system. So as a person who has been in trading for over half a decade, I know, okay, entry gonna be somewhere over here, gonna long it, wait couple of days, couple of weeks, and later one is gonna be a swing trades and come back in later, right? But on a daily basis, I check out my systems, I check out my trades to figure out, okay, what's going on in the market, right? So let's us note this and put it on our system. Okay, after understanding this, we're gonna put this into our system. Okay, let's add text over here. Why investing not always is the best route. So why investing is not always the best route. Over here, we have done the research. So we know right now the difference between investing, how you get scammed based on conflict of interest. And one major thing, which is also I forgot to mention, okay, over here, brokers, sorry, brokers works with YouTubers, works with YouTubers. What do I mean? I mean, when it's coming to affiliate marketing, okay, YouTubers do affiliate marketing, yeah, marketing for brokers. They do affiliate marketing. What YouTuber gains, okay, money, fee. You trade, euros loss equals YouTuber profit. So each time when you trade on the broker platform and you lose money through the fees and spread and more, the YouTuber get a percentage of it. It's called broker contract. And majority of those YouTubers is not showing this broker contracts, right? So I personally am not affiliated with any brokers. My trusted brokers right now I'm using interactive brokers, but they are quite complicated and the systems is a lot of things going on. TradeStation also one of the goods. Uh, of course, all of them mentioned in their contracts. When you read all the regulations and policies of those brokers, they mention always conflict of interest. They mention they're gonna act in their own interest, and they will make sure you lose. Basically, in other words. So we know YouTubers are not your friends. Ask yourself the right question: who is this YouTuber? What's his background? What's his track record? And why should I trust him in the first place? Right? Does he done his homework? If this is something better now, okay. If this is something as is new to you and you never heard it somewhere else on YouTube, give me a like, give it share, and make sure we make many people skip this scammy system when it's coming to trading. So we know how they scam you. Let's now figure out my 4-step blueprint how I make sure I'm profitable. Okay, those made me ton of money. So we started over here and we're gonna go over here into the 4-step blueprint, my own 4-step system. My 4-step system. So how do I approach the market? Okay. How do I approach the market the right way? When it's coming to trading, there is ton of systems, tons of trading, and ton of indicators, ton of setups, and you're never gonna know which one is fits you the best. First, okay, let's make this big enough. Number one, gonna be ask the right question. Ask the right question. It sounds very simple, but it's very difficult. So when he's coming to the right question, such as conflict of interest, or it could be also YouTubers, track record, and more. So that's being said, let's take a thing gonna be, let's make this blue. Instead of blue, let's make it darker blue. And the second thing is gonna be, okay, let's make this one yellow. How does the trading business work? what do I mean by this? How does trading business work? Okay, who is gaining from my losses? Who is gaining from my losses? Right? We want to figure out who is gaining from my losses. Not only just trade, we want to figure out who is making money over here. And also who are the best players? Who are the best players and how they make their money. Basically said, you need to make a business plan. So when you go through a business plan in trading, it's similar to entrepreneurial business plan company. Is that you want to figure out who are the competitors, who are the major trades, how they make the money, how many people are out there, how many traders are out there, how many profitable traders are there. 90% of traders lose, and 90% of those traders who are the 10% who is remained, 90% of them leave year later, and only 1% of 1% remain in the trading game because it's so difficult and not everyone can understand, and there's a ton of information out there which is misleading. So you want to figure out which information is misleading. So when it's coming to news, which I have developed my company for it, you have heard of the phrase buy the rumors, sell the news. So my idea was, okay, let's analyze the market psychology and figure out, okay, what does people think about the markets? When it reaches a specific euphoria level, the market turns to be returning. So big companies, when euphoria is happening, okay, is it they start selling. So people want to buy, retail trader want to buy, institutional start selling. Okay. So retail versus institutional. Institutional. And the third thing gonna be number 3. Let's make this one a little bit bigger. Let's make it bigger. Okay, let's come back over here and zoom in. And the third thing, let's change the color to violet. The third thing is gonna be, okay, how to generate high quality trade ideas. So I'm giving all this information, which has cost me hundreds of thousands of dollars and hundreds of thousands of hours basically in the markets, to give you all this information in such a compact way. If you like it, don't forget to like this video and share it with someone who would appreciate it also. So how to generate high quality ideas is you need to understand fundamentals. Okay, especially in stocks. Okay, and when it's coming fundamentals, okay, in stocks we're talking about P, price earning growth, PE ratio, price to earning ratio, earning per shares, or we're talking also the debt. Okay, how much debt does the company has, revenue, or let's call it ROI. That's being said, and when it's coming fundamentals of crypto, which many people don't understand, I also am into the crypto markets, that trade crypto market, future markets, and more. One thing is in the crypto market is you need to understand order flow. When it's coming to order flow, liquidity, and one thing is the coin layers, coin layers, coin chains, and all those information when it's coming to crypto. And such ways how much coins are locked, how much coins are open, who are the people behind it, are they legit, or there is also the word called detoxed. Detoxed mean the people that are behind this crypto project are known, they are real people. A majority of those crypto projects are anonymous. No one knows what's going on with them. So number 3, how to generate high quality ideas, and only not on the fundamental levels, on the technicals also. When it is coming to technicals, this is my key levels when it's coming to technicals. I'm gonna show you shortly technicals. You don't need a lot when it's coming to technicals. Okay, in technicals you need only price action, but majority out there when you Google price action comes a lot of bullshit out there. So later on in later videos, we'll show you how I use price action. Price action, volume, and that's what I use only price action and volume. And what I also use is which type of volume I use. I use fixed range volume profile, which I showed you at the start of the video. And I use also the VWAP, volume weighted average price, and normal volume itself. My own indicator for for liquidity, which is also understanding the different time frames liquidities. That's being said, okay, we know technicals, we know fundamentals. Okay, based on the fundamental, we generate the idea, and based on the technical, we know if we want to be into this idea or not. And the final, and the fourth step is gonna be, okay, let's make this bigger again. Number 3. Let's do number 4. And the final step is gonna be timing and risk management. When it's coming to timing, when should I enter? Okay. When should I enter this trade? Ask yourself, when should I enter this trade? Is it still high quality trade or not? Okay. When it's coming to timing, technical is asked. Okay. And also one other thing when it's coming to timing, beside the technicals, it is also why should I enter? Which catalyst? Okay, what's happening over here? Okay, which catalysts are out there? It could be news, it could be earnings, it could be price action. So there should be a catalyst when it's coming to timing. There should be always a reason when to enter, where you should enter it, right? After you have been into the position, before you into the position, is called preventive risk management, and reactive. Okay, I'm gonna make those two green because those are most important things when it's coming to trading. Risk management, reactive risk management. So the preventive one, okay, gives us the preventive. It's just preventing us. Why should I enter? When should I enter? Is there a catalyst? Is there no catalyst? How the fundamental is looking, right? All the things upstairs, okay. And the reactive one, what it is, what should I do when everything goes south? What should I do when everything going south on me? So basically, we understand right now my 4-step time frames. Okay, we understand what's the difference between all those investors swinging, scalping, day trading, and how the system scams you, how those brokers scams you, how YouTubers scams you. All this being said, okay, if you want to take a screenshot, I'm gonna zoom it out a little bit. You want to take a screenshot over here, take a screenshot, and I'm gonna go to right now to our guest who has been waiting for us patiently. A surprising guest, and I think everyone happy to see him, and everyone has been waiting for him for a while. And from last videos, I will hop on to Arthur. So, also, do you hear me? I hear you very well. Right on. How is everything going, Arthur? Everything is perfect. Would you like give us a little bit insights where you see the market is going on? You already at the S&P 500. Last time you have done some great stuff on Elliott waves, and you have done your counts, and you showed us your perspective, which were very interesting and unique itself. Would you like to give us the market direction on what do you think about what's going on in the financial markets in general? Everything is perfect. Yeah, I can hear you, but still Discord is not inputting your voice, which is very interesting. Usually there is voice input on your sites. Let me exit and rejoin. So let's check out why the voice is not working over here. Is it a technical issues on my sides or not? Let's go to Discord. Try to hear Arthur again. Yeah, I hear you very clearly. Still some issues over here. Why this happening? Voice settings still very well. Firefox Ultimate. Should be actually be working, right? This one should be working. Can the YouTubers hear you? Seems not. It's very strange. It's never happened before. Checking, trying to figure out why is this happening. So let me play our music to check out if the music over here still. Yeah, it is inputting it very perfectly, the music. Okay. Okay, you know what, Arthur? I'm gonna send you Google Meeting link. Is it the same way? Okay. And over here, just click on the Google Meeting, and this is very strange. We need to figure out of the live over here. Gonna send it into the voice chat over here. Just click on the Google Meeting and you will be over there. So perfect.
Oh, I can hear your voice.
So would you like to speak?
Yeah, can you guys hear me now?
Yeah, perfect.
Oh, you can hear me. Okay, that was some technical difficulties. That's always unfortunate. All right, let's start off with covering obviously the things that you talked about, Mo. Great introduction. What is going to be important is we have a few major events this week. Obviously, we had FOMC today. We also have the GDP tomorrow. And then on Friday, we have the core PCE, which is one of the preferred inflation measures for the Fed, one of the most important, pieces of news that's going to come out this month. And funny enough, comes out right at the end of the month, right? So we're coming into the monthly close, let's call it. And, that's also important for the candle structure, the market structure, how the market will react at the end of the month. But let's see if we can have any predictions that might have some validity based on the current market structure. So as Mo talked about, a lot of the tools that we like to use are the fixed range profiles to give us an idea, where the value in the market generally sits. And we've had obviously this big correction. I think the last time we talked, we were maybe somewhere here or here. And we were just talking about how the correction, the speed of this correction was very, very fast, way too quick, and that you consider
Arthur,
buying
would
the
you
dips.
like
Mhm.
to put the background voice
Oh yeah,
at the YouTube video?
you can hear the background there. My mistake. I'm gonna mute that down. My microphone is super sensitive. So going back to where we were before, we were talking about how the speed of this move was very, very quick, and that likelihood of it is that any corrections should be bought up. And so, within those coming days, we had this, call it capitulation drop. We actually found support on the long-term weekly VWAP. So if you actually take a look at the bear market low from 2022. So this was the 2022 bear market. You can see that, the power of these tools, right? Because when you select the highs and lows, they kind of give you a very strong average. And you guys can see where we tapped right to the dollar. And, you can see that we have confluence several times here. Especially, going forward, I will be paying attention to this VWAP. So what might happen next? So what I am looking at right now is this Elliott wave count that I have drafted. And so for those who are unfamiliar with Elliott wave, the basic premise is that markets tend to move in structures of two different types of waves. So you have one type of wave, which is the impulsive structure, and you have another type of wave that is called the corrective structure, and it moves in a zigzag, either up or down. Now, these impulsive moves can move in either direction. So, you could have a 5-wave impulse to the downside, indicating a strong downtrend, or a 5-wave to the upside. And so one thing that I recognized was that this is a very clear corrective structure, as you guys can see. This is a 3-wave, or I would call it a more like a 2-wave. So you would have one leg, which is a major leg, then you have the relief, and then you have the final wave, which is generally related to the size of the first wave.
Everything is perfect.
And we can actually use Fibonacci, such as trend-based Fibonacci's, to determine where these waves might end. And so you can use common targets that are generally the 1-to-1 or the 1.618. And you can see that these are target zones where these corrections tend to end. Now, what's interesting is where we actually had the wave 2, we actually bounced exactly off the 1-to-1 extension where we were kind of escaping corrective territory. And we can actually now use Fibonacci. What's unique about corrective waves is that they tend to retrace to the scene of the crime, and the scene of the crime is all the way up here. So you might be thinking to yourself, well, what does that mean for the market? Well, there is actually a decent probability that the market can move back to all-time highs. And we can see this through the 5-wave impulse move that we're potentially seeing right now from 1, 2, 3, 4, 5. You can see I've counted it out right over here. And what's interesting is that, with Mo trading fair value and volume profiles, Mo has explained this, several times, and we'd love to talk about the fact that these levels are very, very important for the market because they dictate whether or not, something is overpriced, or if it's fair priced, or whether it's underpriced. And when you break the range, you lose the value profile, meaning price searches for lower value where buyers are willing to step in. However, when the price comes back into the value range, then you see let's call it a value rotation, because markets, they move in ranges, and they tend to move from the highs of the range to the low of the range, and so on. And so what we're potentially seeing here is we are potentially seeing a value rotation. I'm just going to hide this Elliott wave so you guys can see this a little bit clearer. What we are potentially seeing here is a 4th wave corrective structure that came in right into the previous value area. Now, what does that mean? This is the zone that we had originally rejected from for that big dump. And that same zone here in the orange dotted lines is where we're actually reclaiming. So you can see price entered this zone and came in. Whenever you get these failed market shifts, let's call them, so market breaks down and then it wants to come back into value, there's always 2 options. Either we reject the value and go lower, or we drop, come back into the range, and we back test the value area low as a support, and then we can rotate back to the high. And then the market can trend until it wants to break out and then continue trending higher. And usually you get those breakouts at the top of the range. So what we're kind of seeing here is maybe we're seeing a potential support bounce here where we could see a rotation back up to the top, where we have over here the value area high, the most traded zone. You guys can actually see by the volume profile, We do have a high volume node located right over here on the ES at around 6,000. So I would expect there to be some kind of chop, although it would make sense theoretically for price to rotate back to the highs. And from there, we might actually see a correction, back into the range. Similarly, as we saw here, we kind of break into this value range. We'd hit the high, we hit the low, we hit the high, we hit the low. We kind of just rotate. And, we might have that similar type of price action here until we decide to move out of it. So that's kind of where I'm looking at ES for now in the S&P. I think NASDAQ is giving us a little bit of a similar story here, as you guys can tell. I do have this Fibonacci where we recently popped up into this value range after Trump announced pause on China tariffs. And you can see the common area for pullbacks. Whenever you see buyers step in at the 618, it's generally a sign of a strong trend. And so this was not a surprise to see a strong bounce off of the 618, especially after we saw this wick over here. And I would expect the NASDAQ also to come in and rotate up to the highs. Be aware that there is a point of control. So there is a possibility that we could rotate back down, maybe perhaps test the value area and then come up. But in all sorts of fairness, you would like to look for long trades at the value area low and short trades, or let's call them take profits. So if you're an investor in this market, you need to be aware that from the lows, we have rallied currently about almost 30%, and at the top will be at about 32. So you would probably, or you should consider taking profits in this zone, because there is a high probability that we will see a pullback perhaps before we continue higher. Going into Bitcoin's forming some interesting structure here, but I'm going to go over the long term here first. You can see that, prime example of the value area theory. We had reclaimed the value area after losing it here. And you can see that we rotated back to the value area high where we found a little bit of resistance before we actually broke out. And currently, we are forming some consolidation here after back testing the downtrend anchored VWAP. So you can see the volume weighted average price from the top of the Bitcoin previous all-time high is generally treated as resistance. And when flipped, you can see the importance of holding this zone because it then becomes support. And so at the moment, we are looking at a potential flag here. I'm not quite sure, obviously, where the direction of this will go because we can't really predict what's going to happen. But I do have some levels marked out here. In particular, I wanted to get an idea of where the previous range was. And so for me personally, I would prefer that if price was to come into my key zone, we would see a reversal from this zone if we do drop, or if we go higher, that would be great as well, because we are currently in a strong uptrend. We're making higher highs and higher lows. So we are in a strong uptrend on Bitcoin at the moment. If I was to switch my perspective on Bitcoin, I would need to find an area where the market structure will shift. And as you can see, since this recent move from 75K all the way up, we've been nothing but trading higher and higher and higher and higher. And really, the only way that we're going to change market structure is if we start losing these lows over here, in my opinion. Because even if we come down here towards that 101, 102, even 100 range and continue higher, doesn't really change the overall bullish structure. But if we actually break below here and start losing these levels, then that could be quite a bit of sign of danger. So that's what I think on Bitcoin. And what else do we have? We did talk about the VIX. I know Mo talked about the VIX a little bit. I think that for those traders that are trading the equities markets, and for investors too, you need to be aware of the VIX, because the VIX will give you an idea of how high the risk sentiment is in the market. And one thing that I did notice is that whenever we breach over 20 on the VIX, that's generally a sign that there's some market uncertainty. But as you can see, as soon as we breached those levels, we were smacked back down. And so, whenever we get these pops, it seems like the market isn't really willing to trade the VIX that much higher, because I did want to see higher prices on the, or at least a higher reading on the VIX, but unfortunately, it just seems like the market is not willing to do that at the moment. Therefore, it shows that risk is willing to come into the markets at good prices. And so that indicates that we are in a strong trend. And so what I would look for next is perhaps a rotation off the lows, where then we might start to see some hedging coming in. Because at the moment, like I said, it would be nice to see higher prices on the ES, particularly the fifth wave extension here on the Elliott wave count, before seeing a larger retracement. And so if we were to just lose the value area and drop, of course that could happen, but you would be aware that if we drop and lose the value area, well, then this is your opportunity to either take profits out of the market, hedge yourself, or even take a short trade, because there is a possibility we could be seeing an M pattern here. But in order for that M pattern to really execute, we would need to see similar price action that we saw here, where we would see a loss of the range, a back test of the range, and then a further drop to come. But at the moment, I think that this support is quite strong, especially because we had a, what would I call, a failed auction reclaim, where we lost the previous range and then we blasted back into it with a V-shaped recovery. And now we're actually holding the value area low of that range. So to me, it suggests that the market does want to push higher. And so only time will tell. So that's kind of my analysis in the market right now. We'll obviously touch base in the future and see how things play out. Be aware of the major news events that are going to happen this week, including the PCE on Friday, which is going to happen before market open at 8:30. And other than that, I will pass it back to Mo.
Thank you very much, Arthur. You have done a great job over here. Definitely, we have a couple of stuff to go through, and Arthur gave you a very well-structured view on how he's approaching the markets when coming to S&P 500. And one very important thing you have noticed with Arthur here is very focused on the technical. The last part was he's showing you the news, how important to understand the economical news coming into the future so you can anticipate the volatility, and also how to manage your risk in the markets. As he said, VIX is the sentiment of the risk in the markets. So VIX is one of the most important measures of the volatility in the markets. In the most times when the VIX goes higher, it means the market's gonna go lower. So let me show you my screen right now. Let's go over here. Should be there. Couple of stuff I want to go through. As I have promised, here is your free stuff. Go and download your trading journal. Journaling your trades is very important in trading, as you understand which mistakes you do and what the things you're doing right, and you double downs and the stuff you're doing is right. And also, you want to figure out how to generate high quality ideas, and you want to understand why majority of people fails, right? And in trading, there is a huge difference between retail traders and in professional trader. The professional traders don't compromises on knowledge. Retail traders wanna just yellow trades, jump in, make millions, and go out of the markets. Are never gonna happen. And only very, 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 very lucky people who have done it in crypto. But you can also play lottery. If the system you're looking for is just winning bigs, it means you are looking for lottery. That's being said, in trading, we want to be consistent, repeatable ways, profitable. We want to be consistently profitable in trading. So if you take the screenshot on my LinkedIn, also I publish ton of information for free. My trades, psychology, risk management, YouTube videos coming, all information on my LinkedIn, all ton of stuff. I have done it there you can find also more information about my one-on-one mentorship. If this information which I provide you right now is going over your heads and this is a lot, I can understand it completely. This was only the tip of the iceberg, and I will go much deeper into when it's coming to the mentorships and how I use all this information. So one final thing is, don't forget to go to my support resistance levels post to understand how I draw it, so you can understand my trading system better and how I use volume profiles. And in the future, follow me on YouTube, TradingView, LinkedIn, and go to my Telegram, also where I publish all my ideas lives and share my live trade ideas. All of that for free. If you are not willing to take the action right now, and you will never take the action, the only thing I cannot help you when it's coming to trading, motivating you to take the action and take the right action. That being said, folks, thanks to Arthur for showcasing us all his trades and how he's approaching the markets. And see you next week, same time, same day of the week, Wednesday, and we will be going into a newer topic and deeper into my systems and structures. Everyone, have a great night if you are in Europe, and great afternoon if you're US and Canada.